Brazil, Russia, India, and China. Four completely different countries painted as emerging world powers. Starting with the B, a country full of natural resources and with a strong internal economy. Then the R, the country that once competed with the United States during the Cold War, now is a land of big companies and a strong exporter of oil and gas. The I has the second largest population in the world and has emerged as an information technology giant and service provider. The C, the most populous country in the world, has an economy devoted to the exportation of manufactured products. Having grown more than 9% per year in the past 10 years, it is already the third largest economy in the world. In order to continue growing and one day emerge as developed countries, they still face a mountain to climb when it comes to corporate governance. Brazil has been working to create a safe environment through laws and market regulation. But, for example, the government is a controller shareholder of the biggest listed company, Petrobras. In the past few years, some decisions haven't pleased the shareholders, and the company's stocks that were traded for $21 in 2008 are now traded for about $10. In India, the legal environment is also developing, making it safer for minority shareholders. The country felt the urge to change after the huge $1.5 billion corporate scandal of the technology information firm Satyan in 2009. However, proper enforcement of the law is still a challenge. In Russia, there is no sign that the law will change in order to protect local or foreign investors. The country is one of the most corrupt in the world, and doing business there implies dealing with a parasitic state bureaucracy. China is a black box. It is hard for foreign investors to put their money in the country through the Shanghai Stock Exchange. But many Chinese mainland companies chose to list their shares in Hong Kong. However, the Hong Kong Stock Exchange is not pleased with the lack of transparency of these companies, and neither is the US regulator, the Securities and Exchange Commission, now that several Chinese companies are present in the United States. BRICs have evolved in past few decades, there is no doubt about it. But if these issues are not resolved timely, other emerging economies centering around investor protection and corporate governance, such as South Korea and Singapore, can overcome them.